Year in, year out, we've been bearish since 2020. Now, 2020 is when we had a significant run to the upside, which we topped out at 191.22, and we had a pullback, which is this candle right here. Which, funny enough, is the shift in market structure, the first major shift in market structure for that year, before obviously continuing to sell off. We trade to the first area, bearing in mind this is a monthly time frame. We trade to the first area of major sell side liquidity. Close just shy of 154.221, and we rally up. This is a relief rally into an imbalance before selling off, taking out 2018's low. Got a bearish order block, which price still has yet to trade into, and then we sold off into. Now, if we zoom out in the monthly time frame, we can see that this is a 6-month fair value gap. This is a 6-month fair value gap that has been respected numerous of times, many times, just as it did in 2023, and we have yet to get some form of a relief, some form of a reaction down at 108 to 105. Now, if bonds were to continue to fall in price or fall in value, then I'm having a look at, well, next I'll have a look at dollar, but dollar would be in the cards for a good run, taking out buy side. We'll get to that as the time comes. Because right now what we're doing is we're actually backtracking. We're going back to the 6 months when I should be having a look at the monthly time frame. I'm not saying having a look at bigger time frames like the 3 months or 6 months time frame is a bad idea, but it's just that because I am a scalper and I like to take trades, small amount of trades within a short space of time. For me, roughly between 20 to 30 minutes, I like to be in and out of a trade. And the trade for me also includes pyramiding. So I could see a trade pan out in, let's say, the 15 minutes time frame. But then in the 1 minute time frame, what I'm doing is I'm adding to my position. Whether I'm short or whether I'm long, I'm adding to my position based on the signatures and price action that I'm currently seeing at that point in time. Obviously, showing you guys the 6 months time frame is pretty pointless because markets is closed for one. Two, I'm not trading this market. So you can clearly see that on a monthly time frame, we have traded within the prior month's bearish engulfing. Bear in mind, that's bearish engulfing candle which ran on sell stops, right? Shifting the market structure, traded to a monthly bullish order block. I'm not confident that this shows signs that this order block has been respected. I need a bit more than that. I'll be honest with you, if we were to see a spike, so if we were to trade lower, spike into maybe 110, 108, we've actually got a gap right here. So we could spike into that region there, possibly even lower, taking out not only this low, but closing, which is massive, closing inside of this bullish order block, or maybe closing below, but the next monthly candle shoots us right above the order block and even potentially above 108.23, then I'll be looking for these highs to be taken. So this is an inside candle, inside bullish. You could call it a shooting star. I mean, it's 60%. Shooting star is a generic candle. I mean, nothing major. Another, just the thing to take note of is the fact that because it's traded inside of prior month's trading history, now there's a tighter range for price to move in going into the next month. So sell side next, it's buy side next. You can see that there's many stops that many would place if those are short. So what we could do is you could run on sell side, trade into this area here, which was the low before the high. I mean, he could go there, but we'll take it one step at a time. 104.16 would be a good enough region to start off with, really. 102 would be next. Dealing range, highs, lows. This is for this upcoming month, the month that we're currently in right now. So the goal is to get an understanding of where price action is most likely to go to, whether it's going to take sell side or whether it's going to take buy side out. We know that sell side, there hasn't really been that much manipulation in this month's price action. So relative equal lows, which would be 11217, would be sell side liquidity, which also coincides with the bullish order block as mentioned before. You've also got a bullish up close candle within an overall down move. Would you consider this a order block? It would be considered an order block, as this month was traded into the lows of that region before rejecting and closing, I'd say 35 to maybe 40% inside of the prior bearish Marubozu candle. Now, if that being said, it obviously shows weakness. Alright. Now, if you was to go into the weekly, get into the meat and potatoes of price action. From this massive sell-off that we had from the beginning of pretty much from the highs of 2023 to the lows of 2023, order blocks was created, in which price action respected back in April. Since then, price action hasn't really been, didn't really flow as well as it did when we had this fall, As you can see, we're currently in the downtrend. We have a weekly fair value gap in which price action has respected 2 weeks ago. We've also got dealing range low, dealing range high, equilibrium in which price has traded to and into and through, meaning that price went into a short-term discount, which this bullish order block is actually a discount array because it's in a discounted regions and price action, meaning that if you're buying, you'll be looking to buy at these regions here. Before this even happens, you've got time, right? So we trade into a discount, confirm, because we trade above the prior week's high. Bear in mind that this accommodates for 5 trading days. 5, if we're not talking about Bitcoin, 5 trading days is recorded in this one weekly candle. Now, if we get this shift in market structure to the upside, taking prior week's high, that is a big thing. That is a big thing. You can't just sleep on that. So once we get that, that is a confirmation. Not only that, we actually trade above the second prior week's high. and open. And we get to 116.16, which is the equilibrium, meaning that we traded up into equilibrium and briefly into a premium. We closed in a discount, but there's strength, meaning that we could potentially run higher, which we did. We ran into a premium, briefly traded into the fair value gap as mentioned before, and we consolidated, and this week we sold off, taking sell side liquidity. Currently, right now, price action is in a discount. Right, we spiked into a minor imbalance in price. We failed to go back to the bullish order block. What I can see here going forward, if we were to have a look at the weekly time frame, bear in mind that last month was an inside month. I don't believe that this month is going to be an inside month. I think that liquidity pools will definitely be attacked. We've got this SIBI here, which is important. We've also got this weekly fair value gap, which would be my first point of interest. So what I will do actually is leave this where it is and stretch this out to where it needs to be. We're also going to leave that how it is. So I remembered in my intraday analysis, I've already kind of done my annotation. So actually I haven't, not for next week. What am I talking about? So yeah, you can let that slide, keep that there. But this is, do I really need a Fibonacci? I could just write that down, isn't it? We'll leave the fib for the time being. Very sticky price point that we're in right now. Where have we come from? We've come from this weekly order block, 2 order blocks to be precise. We first spiked on the first order block there before going down to the second order block and trading to the upside. So we came from that area. We traded up to the weekly fair value gap before retracing into a discount. Now, if we were to continue lower, where are we going to go next? Well, lows is prone to be created. So I'll be looking at the order block one more time. I'll be looking at the order blocks. If we were to ever get a sell-off, that is where I'll be expecting price action to trade to. Let's stick to the weekly. So we obviously sold off. We sold off into... It's funny, you know, because now looking at this, you see how all of this is crazy. So let's go back a minute. Because even I am learning on the job. Because have a look at this. We come from the bullish order block. We trade up to the fair value gap. We retrace into a new order block because we've got 1, 2, 3, 4 down close candles, right? Before we see the upwards move to the upside, before we start seeing upwards candles, bullish candles trading to the upside with a confirmation. And if we were to have a look at where price opened at, it will be 11412. Where do we wick to? 11411. So we traded 1 tick lower than expected. Didn't even spot that, I'll be honest with you. T. There we go. We traded to an order block. We respected the order block. Now it's anyone's take, really. I'll be honest. Now with that in the works, now we have a look at the daily time frame. Two order blocks in one. We trade just in the middle of it. That's crazy. Look at that. And then we trade up to that 11616 region. Just doing some tidying up here. And today's price action, we close before wicking at 11616. This is actually, it's funny because I actually projected this in my recordings that I've done that I actually never uploaded. Having a look at this, it's very hard to tell where price action is most likely to go next. The candles that we do have, it's only 4 due to Monday being bank holiday. I do believe that if price action was to run higher going into next week, this is where I'll be looking at. I need a bit more information. I'll be honest. I would have to see how Monday opens, Sunday and Monday opens, because it's not really clear. Looking at it from the daily perspective, because yes, you've created lows, lower lows, lower highs, lower lows, lower lows, lower highs, higher low. See, we would have to trade higher, fake at this region, or even possibly fake out 118 without creating a new high. Or if we do, we manipulate and have a candle body closure below that area and we sell off. Because if we don't, then that will be a macro shift in market structure. And then we'll be looking for 120, 122, and so on and so forth. So what I ideally would like to see is a continuation of lower lows being made on the macro time frame. Yes, we'll have a look at the daily time frame. So I'd like to see lows at least from 11227 lower. That's just being generous right now. Let's have a look at the weekly. I don't need, I'll be honest, this can go. It's too much. This.